welcome to the live stream. It's Sunday. Hopefully, you're enjoying your weekend, having a good time, and thanks for spending some of your weekend on this live stream. I've got Scott with Scott's Due Diligence with me, and not the first time. How you doing, Scott?
Good. Hey, everybody. Good to be here. What do you think of CrowdStrike? That was just popped in my head.
Mm-hmm. I think.
It's
well.
Yeah,
I think
great.
CrowdStrike's expensive, and
Yeah.
I probably should qualify my opinion. And let's talk about CrowdStrike. We could talk about that on the stream. That'd be a good one to talk about. And I'll talk about how I view CrowdStrike, but I'd like you to share first because I don't want to influence you. And then,
well, I have a specific situation with CrowdStrike. A family member wanted me to invest their money, and I put it actually all into CrowdStrike. And they ended up, when the market came down a couple of years ago, it wasn't 2021, it wasn't 2022. I think there was a drop at one point in 2024, and they sold it, and it just kills me because it tripled since they sold it. It's like tripled in the past year or so, and that's what people like. A lot of people, family members, things like that, they trust me because they hear me talk about it. But when the market goes down, they just get scared, and it happens all the time. And they sell a loss a lot. I'm like, it takes time. Like I bought Berkshire Hathaway, and it literally took 5 years to start seeing momentum. But I knew it was a good stock, but people just can't hold. They just get too scared, and that's why I don't even like investing for people because of that.
Yeah,
that's my CrowdStrike story.
A friend of mine, he asked me the other day. He goes, "Hey, so can you give me like a good stock tip?" And what's hilarious is he really meant it. He meant like, give me a stock tip that I can like triple my money by the end of the month, literally. And I'm like, no, I'm not going to give you anything because it's just not the right context. Investing for me is like, it's like planting an orchard of trees that will bear fruit. And sometimes, like many trees, they're not going to bear fruit for a year. But if you stick to a good investment, for all you know, you're going to be sitting on a big, beautiful avocado tree 10 years later that's giving out all this fruit. You pick the avocados, you take them to market, and each season you make $1,000 off this tree. And you have this orchard full of trees that are, just giving out this fruit. It's a little bit like how stock investing is for me. It's not going to happen immediately, but once you have the orchard out there and it's producing fruit year after year, you can then say, okay, what kind of new trees can I plant in that orchard? It's already going well. I'm making lots of money. How can I make my orchard bigger? Can I buy more land and plant more trees? And that's not what people want to hear. They want to hear, how can I get wealthy super fast? By the end of the week.
Yeah. Right.
It's like, well, play the lottery, but you're going to lose.
Yeah. You remember what was it? The Big Short. I remember reading The Big Short, and it was Michael Berry, right? It was about him.
Yep.
And his fund, he shorted the subprime market, and I remember reading it, and people who invested in it, they were like so upset with him because he wasn't making money for a while, because he did short it, but it wasn't like the following day. It took like, I think, a couple of years after he shorted it is when everybody else found out about it, and the market crashed. But his investors, some of them were like, what are you doing? I'm down 25%. and the market's up 50% in the same time frame. So some people sold out, but if the people that held got like 2,000% return when the market crashed. But you don't know when it's going to happen. So unless it's like instant gratification, people just can't wait. It's like losing weight. If you're really, really overweight and you go to the gym for a month and you actually gained a pound for the month, it's not the gym's fault. You're just overeating, so they always like, what's the point? But it's a process. It takes time. And there's no like you said, people looking for fast results.
Yeah. All right. So we got a couple of discussion points that we're going to talk about just to set a quick agenda with everybody. So we wanted to talk about stocks that are going to be good in the second half of 2025. The first half has been just great. I'm up 17.5 or so % year to date. That's great. I want to do the same thing for the second half. Then it'd be a phenomenal year, and it'd be 3 phenomenal years in a row. So that'd be great. So that's going to be the first topic. Kind of brainstorm around some ideas there. The second topic is going to be, let's talk about some financial stocks. We're going to talk about banks, how to go over book value, how to understand book value. Banks, you got to view them differently. And I'd love to hear what Scott has to say. I'm going to let him kind of lead the conversation, and then I'll chime in as much as I can. And we'll talk about banks and how to value them. They too could be a good thing in the second half, and we can talk about that later. Then the third topic is this kind of bonus round. And what stocks do you think have the best chance to be worth 10 times their current stock price? Not immediately, not within the next year, but hey, that business, if they do everything they say they're going to do, they're going to be worth more than 10 times their current value. So it'll give you a little bit of time to think on your feet, so to speak, and then we can kind of take some guesses there and maybe just theorize, hey, that's why this business can really go 10x. That's why this business can go 10x. So sound okay?
Yeah, sounds good. Sounds good. How many people on the stream? I can't see the number.
I see 9.
9, okay.
Yeah.
Yeah. People comment. I'm curious who's here.
Yeah. Please, check in on the stream. Let us know who's on, and then we'll get going. So stocks to buy in the second half. It's been a good first half, right? And I'll kind of change from CrowdStrike to the S&P. The S&P is up 12.75%. You see this correction in the market. It went down 19%, and then it just picked itself up. Such a vertical V recovery, and it went up 23.89 since the trough. So just a really good market if you had capital. And I was, accumulating some capital here, selling some shares here, selling a position there, and I was ready to buy more Meta, buy more Amazon, buy more, Robinhood, buy more, just fill in the blank, because it was great. A lot of these stocks that were just flying up were all of a sudden really discounted. I bought Oscar Health. I bought A-Lab. A-Lab was a terrific opportunity, just on and on. So what can we think about like second half? It gets harder as the market keeps going up in price, right? It's like, it's hard to find a discounted stock when everything's so expensive. But let's kind of get going. I think you had an idea in UNH. You want to talk about UNH?
Yeah. Because stocks that go down because the company's losing money is not good. But stocks that go down because of some news story, and it seems like United Healthcare had a lot of news stories that dragged the stock down, even though the fundamentals weren't really changed. Did anybody know what I'm talking about? When I say news stories, like what are some big news stories?
I definitely
at
do, which
United?
is one of the big ones is their CEO got assassinated last
That
year in
was huge.
November.
Yeah.
Yeah, that made some news, most certainly. And then they pretty much promoted like the next man up into CEO role. And that guy, he was fairly old, and he resigned about a month ago, 2 months ago, and he said, "Hey guys, for personal reasons, I'm going to resign," and he resigned. So the CEO job is really important, but you're not buying a piece of the CEO. You're buying a fraction of this business. And I agree with you that the fundamentals of this business did not change. If you look at, are they growing the business, attracting more customers, getting more revenues? Yes. They continue to grow their top line. Do they continue to profit? Yes. Generate cash flow? Yes. All those things didn't change. The news is negative, but the business is still the same. They're the number one health insurance payer in the United States. They're number one. Most big giant companies use United Healthcare. That's their go-to. So when I value the stock, I think it's a discounted stock, and I've been buying into it because to me, it's such an obvious opportunity. This is like uh, when Meta was sold off in 2022. It's kind of like that situation. To me, it's discounted by 50%. Once the market gets over the fact that
Yeah.
there was some negative headlines, it's going to revert back to its share price. It usually trades around fair price, fair value. And I think I'm going to make a quick, 50% on this stock, like in a year or so. That's
Yeah.
my position on it.
And it's pretty much down 50% from the peak a year ago. Is anybody having issues with my recording? Because it keeps going in and out. Like it shuts down. Like the screen goes black for like 10 seconds. Did you notice that on my computer?
No,
Okay.
no, everything's
So
fine.
I guess it's just okay, as long as nobody notices. And so I think one of the best times to buy a stock is when there's like these crazy news stories. Like, I mean, a CEO gets assassinated, or there's a huge lawsuit. I mean, it sounds bad, like, oh, if they have a lawsuit, they could lose a lot of money. But these companies have like 20 lawsuits going on at any time, all the time. People sue at the drop of a hat. So it usually doesn't affect the company too much, even if it's a few billion for these companies. It's just part of the game. Like if you're a tobacco company, it's constantly lawsuits. People hate you because people die from using your product. But so that's why United Healthcare. But I should put my money where my mouth is. But I have to figure out what am I going to sell. So that's the thing. Yeah, I have to see what one I'm going to sell. It's so hard. It's like your baby, like getting rid of a stock. It's almost.
Yeah, I guess. But the thing I was going to comment on United Healthcare is it most certainly is a problem that, hey, you don't have a CEO, and they brought back the previously retired CEO, and he came back, and he's kind of like what Disney did. They brought back Bob Iger, who had retired, because the new CEO didn't work, right? It just was going bad, and now Disney's doing better. So that guy came back. Now, where I'm going is, it most certainly is a problem not to have a solid CEO for the future. Got it. But you can solve that problem. United Healthcare is a really good company. Even with the big sell-off, it's still a $280 billion market cap. It's not like you're going to go be the CEO of GameStop or something crazy. A lot of CEOs would be like, yeah, I'll take the United Healthcare business because it's a good business and it's all upside from here. I just have to run the business effectively, get everybody to do their part, contribute, show good leadership. And they can solve that problem by hiring the right person. You see that like Nike hired the right guy, but it's an apparel business, right? And then Starbucks hired the right guy. That's a restaurant. I don't want neither of those businesses, but this is a very good business. You think about how easy is it or how hard is it to switch out a health insurance provider for a company. It is like open heart surgery. It's like, oh my God, I have 100,000 employees. 80% of them are with United Healthcare. You know how disruptive it would be for me to change health plans and say, hey, everybody, we're not going to do United Healthcare anymore. We're going to do Elevance.
Yeah.
We're going to do Humana. We're going to do Oscar Health. Who knows? That would be super risky. That you're going to upset your employees. You're going to create a lot of risk, a lot of stress for your employees. So switching out your partner to provide healthcare is literally like open heart surgery. You just don't want to do it unless you absolutely have to. So I am very bullish on United Healthcare. I have been buying. I'm a dollar cost average guy. I know that we could probably have a debate on, well, is it better to do lump sum or dollar cost average? I've been buying into United Healthcare, buying it because for all I know, the news gets worse. And next thing you know, it's like, oh no, they have to retract financials for the last 2 quarters because they were misstated. Well, that would be really a big problem. I'm totally making that example up, but so I'm going to dollar cost average in, but I'm comfortable. At one point, I had like $100,000 invested in United Healthcare because I had it. I sold it. So United Healthcare was a successful stock for me. I held it for a long time. I sold it around here. It continued to go up some. That's fine because I made money, and I switched to a different stock, and now it's down, right? So at that point, I had like 100,000 in United Healthcare. So I'm happy to put 100 in and let it grow. Let it grow to 200 and probably not sell the stock at this point.
That's a good feeling when you sell a stock, it goes down, and then you buy it back. You feel like a genius. That's shorting, in a sense. When you short, that's pretty much what you're doing. Is that you're selling the stock, and then buying it back at a lower price point.
Mm-hmm.
That's what an option is, although it uses leverage. You don't have any options, right, on your account?
Two options right now.
All right, you were shorting.
I'm shorting Nvidia, which is arguably a genius move, wouldn't you say? Because the stock.
When did you put the short on? Was it recently, or?
I'm trying to be sarcastic. Sorry.
Oh, okay. I was wondering. Okay, yeah.
I shorted. So let me go through this. So I shorted it probably around the March timeframe, around here, right? And for a while it looked good, and then the way I've shorted Nvidia and Broadcom is this way: is I bought a put option that expires a year in the future. So that way, at any point, if it drops below a certain amount, I just take the profit. That's how I made money on Nvidia last year. That's how I made money on a couple stocks, including CrowdStrike. I did the same thing on CrowdStrike before they had that PC outage.
Yeah.
And in 10 days, I made like 55% on CrowdStrike on a short. So that was cool. But right now, I'm so underwater on Nvidia and Broadcom. We'll see. The good news is the rest of my portfolio is like flourishing so much that this is immaterial. I bought the contract for like $2,000. I bought the Broadcom contract for like another $2,000. And if I lose all my money, it's $4,000. Well, I'm up 320. I'm up like 325 grand year to date, so I'll be okay.
Yeah, exactly. Yeah, you got to look at the big picture. And I get annoyed too when I take a loss. Like, oh, why did I get this? But But yeah, that's if you're not taking losses, you're probably not investing well. Because if you're investing well you want to get good returns. You don't want to just get like 2-3% a year. But if you play too safe, there's probably a good chance that you're not maximizing.
Yeah.
Because you do have to take some risks.
What is your, back to United Healthcare? I don't know if it's easy for you to do, but what is your valuation on United Healthcare?
Let me see. My DCF. 1 second.
While you do that, let me say hello to everybody. You cue it up.
Okay. Here we go. 658.
658 is your price, right? Mine is
when I did the video, it was 520 the stock.
So I'm at 615. Yeah. You're at 658. Okay. So we're both saying that it's discounted substantially. And now, does it mean that it's going to go up tomorrow? No, it means it can go up tomorrow, but over the long term, stocks will revert to their intrinsic value. Over the long term, stock market weighs cash flows, weighs profits, and reverts to the intrinsic value of those cash flows. And over the long haul, I think it's going to revert back and go up 50% and maybe even exceed that, because the business keeps getting bigger and bigger and more valuable. It's not a static investment like a bond. No, next year they're going to be 10% bigger. And the year after that, another 10%, and it's compounding a bigger number. So 5 years from now, it's going to be 60, 70% larger than it is today. And it's going to be more valuable. So I think it's a good one. I think that most definitely is one of the stocks that I'm buying and believing that it could really do well second half of 2025. It's had a good month. It's had a decent month.
Yeah, what do you guys think about it? United Healthcare. Because when a stock goes up a ton, like Nvidia, or when you see these big rushes of, people always say the same thing. At least I say it. I go, oh, it's so obvious. Like that makes. But if it was so obvious, like why didn't we invest in it? I think this one seems so obvious. So let's take advantage of it. But yeah, I invested 20,000 in Lumen Technologies, and I'm down 50%. I was down 60%. So, but you got to take. Of course, I'm not happy because I have a Roth IRA from when I opened it when I was like 20 years old. So I had everything in New Holdings. That was one of my better investments. I put 35,000 into New Holdings, and it turned into like $100,000 after like 3 years. So I was really happy with that. But I wanted to lock in some gains, so I sold 20,000 of New, and I bought Lumen, and I just burned 10,000 from doing that. Actually, more than 10,000 because New Bank ended up going up since I sold it.
Mm-hmm.
But you can't. But this is just how it is. You can't.
Yeah.
You got to take some risk. You can't just play it really safe all the time. And I didn't think it was that risky, but it didn't work out. But I'm fine. I'm still holding it, so I'm hoping for a rebound.
Good. Yeah. So looks like Saeed is in. He thinks United Healthcare is a buy. Good to see you, Saeed. Metal Notice, how you doing? Last half's all over the chat. Thanks, man. Thanks for being such a big contributor. And he also brought up that there's a story that United Healthcare was paying bribes to nursing homes, and that most definitely could be like a negative story, but I'd have to see the details. Chris Seven, good to see you. Shadow Guy, good to see you. Shadow Guy. Thuan 123 Red, you bought United Healthcare, man. I haven't seen one comment of somebody saying you guys are crazy buying United Healthcare. So United Healthcare seems to be an consensus that, hey, it's probably going to be a good investment. So we'll see.
Yeah. I could definitely look back and say, oh, this was a good call, because I have it recorded on a video. Oh, this was a smart stock to suggest. But I could also go back and have plenty of videos when I go, oh, I was really off on this. So it's easy just to focus on the better ones.
Cool. So that is United Healthcare. Any other ideas that on a stock that could work for the second half?
So the real popular ones, I guess AI connected stocks. So the Palantirs, Nvidia, Tesla. I think Tesla is a good buy. Not long term, but I think I could see on a short term basis, people just keep buying into it just because of robotaxis. And that's how Tesla moves. It moves a lot before fundamentals set in. I'm not sure on a long term basis, but I think short term, I could see that stock getting pushed up close to $2 trillion.
Yeah, that'd be a big move. Right now it's $1 trillion.
Yeah.
And what's interesting is, see there, it's at 323. Man, you could have bought the stock at 220, 200.
Yeah, you could have got it. Yeah. I sold my Tesla a while ago. I bought it at 300 in 2022.
So here are some questions around Tesla that it's kind of a little bit of a, I'm not sure if this is the case, but I think xAI is Elon Musk's AI business, right? But that's separate to Tesla, right? It's not part of Tesla. Is that correct?
Right. Well, X is Twitter. So you're saying xAI is a different company?
Yeah, I wanted to confirm that.
I'm not familiar with xAI. Did you know that in the late 90s, he had a company called X?
Yeah, I did know that.
Okay. Yeah. So he had a company called X, and he did payment processing, and then him and PayPal merged.
Peter Thiel and others.
Yeah, Peter Thiel, who was running it, they merged together. Elon's X company and PayPal merged together, and then they gave Elon the boot, and Peter Thiel took over the PayPal business. I don't know what Elon did after he got let go. I don't think he made much of his life, but he's only the richest person in the world.
Things worked out okay for him.
Yeah.
So I get that he's forming these businesses, and FYI, he's probably going to be the richest guy in the world for a while. Here's why: he owns Tesla, but separately he owns SpaceX. So if you're a shareholder of Tesla, you get no value from SpaceX. It's just a different entity. You have to buy that stock separate. Then if you want to buy the AI business, that's sold separate. I guess the stock should come with a label, accessories sold separately. So if you want to buy the AI business, you have to buy it separately. If you want to buy the rocket business, separate. So it's not going to be a giant conglomerate. So I don't know that Tesla, now the robotaxi piece, and I'd like to see on the chat, robotics too. I think Tesla can come out with robots, as well as they can come out with robo taxis, which are robots in the form of a car. But how soon do you see this robo taxi business being substantial, having some kind of scale?
I think it'll take a bit of time. That's why I think in the long term, I don't see the value. But in the short term, people are going to just push the stock price higher just for the fact that he has a robo taxis, and at some point in the future, he'll make a lot of money with it. But I think to really scale, having done his first ride was a big deal. So I think in 1.5 to 2 years, I think he can be as big as Waymo. I'm not saying he will be as big as Waymo, but I think if he does it correctly, then he can. But Tesla is not doing that great. The cars, like, isn't it? It's coming down, right? Like the number of cars they're selling.
I think that
it's on that one trend, right?
So, I have a theory that is unproven. It's just a theory. I don't even know if I believe it, but here it is. So if you look at their quarterly, right, it's not good. The last quarter, they were down 9% in sales, and the situation's bad. They're not buying Tesla cars. In Europe, the numbers are awful. In the US, the numbers are bad. In China, they got competition there that they don't know what to do with. The competition in China is tough. They're making really good cars for $10,000 that are full EVs. They're good cars. Okay. So
yeah,
they're not going to grow their revenue. So it's a theory that I have that, well, Elon Musk is like, well, turning the ship around on cars is going to be impossible. But if I spin a new story and the Pied Piper starts playing his pipe, investors are going to be like, oh yeah, it's not about the current business. You don't even pay attention to the current business. It's all about robots and robo-taxis. Yeah, it might take 5 years to get there, but now Elon Musk just bought himself 5 years to try to figure it out. And until then, they got to figure it out, but if he's not going to be kind of held accountable to the performance of the company for another 2 to 3 years, 4 years, 5 years, and he has to show more evidence that the robotaxi is real. He did show a little bit of evidence this past week or two, showing that, and that was very staged in a way, the robotaxi rollout. Only 20 people were given an invite, and all 20 were Tesla supporters. So they were probably more inclined to say something positive, if not just have a love fest for the company. It's different than Waymo's been out there driving real people around for years, and I don't think we've had a incident with Waymo where it's like, oh my God, the Waymo car killed a family of 5 because it was driving recklessly. No, nothing like that's happened there. So what do you think about that theory that I just spun about, hey, let's just distract the market, then we don't have to be accountable for our car sales?
Well, yeah, he's the master at that. And I just been real bearish on Tesla for a long time. So I mean, I think it's a really good company, but I don't think it's as valuable as the the 1 trillion market cap. But it doesn't really matter. Like, it's kind of like selling a house. Like, it doesn't matter what you think it's worth. It matters what someone's willing to pay for it. And if somebody's willing to pay $1 million for your house, it's worth $1 million.
Yeah.
And so people are willing to pay $1 trillion for Tesla. So I guess it's worth $1 trillion. And it did come down because my friend, he's into investing now, but he wasn't too much. He put 30,000 into Tesla, no, 25,000 into Tesla, and it turned into 250,000. So, and that's his entire investment. He did sell some and bought some other stuff, but he didn't do that well in the other stuff. All his gains were in Tesla. And I was telling him for a long time, like, I really think you should lock in. I just don't see it. I tried to like go through my Excel VPF with him, and then but the stock kept going up, and I said, I was wrong. You're holding on, and it's going up. Of course, it came down to points, but it's right back up there. And I mean, I don't know. I can't figure it out.
It's
how it works.
It's a stock that has, a lot of celebrity influence behind it.
Yeah.
I mean, Elon Musk, it deservingly, right? He's done some incredible things. His celebrity status, people are just buying into Elon Musk, and that's their investment. That's the way they're going to play it. While we're talking about Tesla, let's talk about Palantir. That's a stock that's just been on a tear for the last couple of years. What's your feeling on Palantir?
Yeah, that's my most upset stock. The stock that gets me so pissed off and depressed.
Well, that's why I brought it up.
I don't mind when stocks go up a lot, like Nvidia, and I didn't buy into it. I mean, it doesn't really bother me that much. But what really bothers me is that I own Palantir and I sold it, and it ended up going through the roof.
Brutal.
I'm scared to look how much money I had into it, because if it was 50,000, I might jump off a bridge. But if it was only like 10,000, I could handle, because it went up 10x.
Yeah, it's been such a winner, and just to hold myself accountable, I've been like probably 2023. I wasn't as bearish on Palantir, but once it started to go up, you know how we all have biases, right? My bias is I've worked in the software industry for a long time. I know a software company when I see it. I know what a software company provides when I read about them. And to me, Palantir is a very good analytics software company. Everything they do, we have been doing in the industry that I work in for 25 years. It's not like Waymo. Hey, this is a robo-taxi. It drives itself. That's new. That's never been done before. Palantir is doing a lot of the same stuff we've been doing for 25 years, but they branded it differently, and they jumped all over AI, which is good for them. Good for them. So I've doubted it all the way up, and you could say I missed it, but I caught a lot of other investments, and I still hold the same regard of Palantir as either everything that I've known for the last 30 years working in enterprise software is wrong, or I understand Palantir. I understand their business. I get what they're about, and the industry's been able to do that for 25 years. I don't see anything special, and their growth is good. Palantir's growth is good, but you look at their valuation, PE 540. When you have a PE of 540, man, it's got to have incredible growth. And you have 33% growth on a business that's $3 billion in size. To me, that's not incredible. Microsoft's growing at 25%, and they have a business that's literally 80 times bigger than this. So to me, I've always been like, why is Palantir priced so high? You look at their free cash flow, 1.3 billion, and their market cap is 300. So you're paying 230 times free cash flow. That is so expensive. So all those things I look at them, and I'm just amazed that the stock continues to go up. But I'm so happy for anybody that owns it. I know somebody on this stream owns it, and congratulations, you know who you are. I hope it keeps going up. I hope it doubles from here. I hope it triples from here, because my good friend owns it. But I'll always kind of share what I'm seeing, because I think we could all be better investors if we have a community of investors and we all just kind of state what we're seeing from our perspectives. And if we happen to all agree on something, we might have something like, hey, everybody thinks United Healthcare might be a good investment. But maybe there's a stock where there's divisions. There's like, no, half the group thinks this stock is terrible. Half the group thinks it's great. Well, let's listen to both sides. Both sides are probably going to make good points. And then we can make decisions for ourselves individually. But this will be a super interesting stock to cover, as it's been for the last couple of years. And we'll see where it ends up. But you stepped away, Scott, but I don't know if you caught that, the PE of 540.
Yeah.
You're paying over 200 times free cash flow. You look at the annual cash flow, it's 1.3 billion, with their price at 308 billion. Their revenue growth is not incredible to me because it's a $3 billion business and they're growing at 33%. Microsoft's growing. You look at the Microsoft business, and Microsoft has a competing product that you could compare to against Palantir. But what I want to point out is you have a business that is 270 billion in revenue, growing at 14%. That to me is incredible. That's the business by like $40 billion each year, the equivalent to, what is that, 12 Palantirs a year. You're growing 12 Palantirs a year. And Palantir is a smaller business. It's 3 billion. So we'll see where this one lands because it's certainly been a super successful stock. And we'll see where it goes.
Yeah, it's well, but when you make so much money on a stock, it's like you're like, when do I sell it? And you hear all these stories, or you've experienced it when you sold a stock at a 100% gain, you doubled it. But if you just waited another year, it would have been 1,000%. So like, at what point do you sell? It's a hard thing to do because you do want to lock in your gains, but you don't want to risk what if it does crash the stock. But you feel like an idiot when it goes up a lot. But I guess that's the hard part, right?
There's
no one to sell.
Yeah. We'll see. Palantir has been incredible, and I will say that I've been wrong. I could say what I just said, over and over again, but the reality is the market doesn't care. The market said, no, Palantir is worth more because, like something you said earlier, what's a house worth? What somebody's willing to pay you for it? What's Palantir worth? Right. What investors are willing to pay for it? They're willing to pay $130 a share.
That's how anything gets its value, is what someone's willing to pay. It doesn't matter. A lot of people, when they sell things, they're like, oh, this is worth 10,000. This is worth. No, it's only worth what someone's willing to pay. And if nobody's willing to pay you 10,000 for that necklace, or that's just, then it's not worth it. Or you just didn't find a person who's willing to pay that much. Palantir is a young company. That's true. It's probably close to 20 years at this point. Palantir.
Is it? I thought it was younger than that.
I could be wrong, but
this site will tell us right here. Founded
22 years.
You're right. 2003. I thought this was like a new super cool company that's going to take over the world.
Because he's been working there. I mean, he's there from the beginning, Alex Karp. And so they've been, well before the company went public, it was at least a decade, more than a decade of work they've been doing. So he's a real smart guy, Alex Karp. It's so pissing me off so much.
All right, let's switch stocks. I don't want you to punch your computer monitor. Let's talk about
it's
NVIDIA.
Okay.
Hopefully this doesn't upset you.
And it doesn't matter how much money you make or lose. We're human. There's no way we can avoid these things. But I mean, I'm not that upset. I don't lose sleep over it. even it's nowhere even near that. It's just I don't know, whatever. How many people on the stream?
We got 42. A lot of good comments coming in.
Wow,
Real good comments.
Holy cow!
Yeah, we got Metal Notice is showing up. Neil Weston.
Hey Neil, he's on both channels, right?
Cool.
He's been viewing.
I think he's your
for a while.
viewer. He might be on your channel, so that's cool.
Yeah, he's definitely been viewing mine for a long time. I thought he was sub to you also.
Mm-hmm. So NVIDIA, let me kind of lead this one. It's a $3.85 trillion valuation, and it's been an incredible stock. And it really did see a nice pullback down to 94. I think it was lower than that. I think at the very low point, everything was down, 94, 96. So now, what's going to prevent the stock from going up? Part of it is this valuation. It's one thing for a stock to go from like 25 billion to 50 billion and double. Like, oh wow, the market doesn't even notice that. $25 billion of market cap appreciation. But let's just talk big numbers. If this stock were to double in price and the market cap doubled, this would then be a $6.7 trillion market cap stock. And
yeah, it would
the
be
total S&P,
90% of the world.
The market cap for the total S&P. So it's 52 trillion. Okay, if you want to buy all the S&Ps, all those companies, 52. So would it make sense? So right now, 52. So this is roughly about 7% of the S&P, one stock. Okay. But if you double, would it make sense that it would be 14, 15% of the S&P? Whew. Man, that's a big portion.
Roughly, not it wouldn't double exactly because the denominator would also increase, but it almost seems illogical even saying it. But I'm sure it was similar to, like, there was times when, we said, oh, Apple's worth 100 billion. If it was worth $1 trillion, it would be, and it became that. But don't sit back. Don't be scared, and don't listen to people who are saying it's overvalued. The market is going to crash. It's going to be worse than the Great Depression. They've been saying that for years. There's no indication of that. Companies, the world economy is really strong, so much stronger than it was 20, 30 years ago. And there's no reason. We're innovating at a constant speed. So get your money in assets.
Yeah, I agree.
It'll keep going up.
So one thing I'll point out is, even though NVIDIA's had a terrific rise from the bottom that was achieved in April 21st, 62% rise, but the year over year is 17, which isn't breaking any records, right? Because it was trading so high in 2024. So you're going to have some compares that are going to be a little tough for the next couple months, and we'll see where it goes.
Yeah, it's Palantir. That's the mini NVIDIA. So if anybody wants to get a 10x return, it can't happen in NVIDIA, because unless NVIDIA is bigger than the rest of the world combined. But to 10x, Palantir could, I guess, because what is it? 250 billion?
300
billion.
300 billion.
So yeah, so it could just go to 3 trillion. It's just that easy. That'd be crazy if it did.
Well, I'll remember this day when Palantir hits $3 trillion in market cap, I'll be like, man, I remember the day. I remember the day.
And then we'll be like, oh, it was so obvious. I always look back and think, why didn't I just put all my money into? If I put all my money into this, I would have had $50 million, right? But that's kind of like the theory of like when you play roulette and you put $100 on black, and if you lose, you put $200 on black, and you keep doubling up. All you have to do is lose once to get wiped out. So if you did that strategy, threw all your money into a stock, it would work out until just one time it didn't, and then everything would go away.
Yeah. Yep. All right. So let's kind of pivot a little bit, and we'll go into financial stocks. We're going to get off this.
All right. Thanks.
These incredible technology stocks that are setting records, and we'll talk about financial stocks. And I think financials are going to do well in the second half of 2025. And part of it is, so interest rates are expected to go down. I think that's kind of being priced into the bond market, which looks good. The regulations on banks are softening up and allowing them to carry less reserves and be able to use that capital and lend it out, use it, and make more money, take higher risks. And the regulations came out of the big financial crisis, and now they're beginning to realize, okay, well, maybe we can loosen up on the banks. And when that happens, I think banks will do better. So that's a couple things that are going to help it second half. And I did some homework. I was on your stream yesterday, and we talked about financials. Let me try to center this, and I'll make it a little bigger. And here's a big bank comparison. Citi has a price to book of 0.81, and then here are all the other banks. JP Morgan having the highest price to book, and it's a very good company, a very good bank. I owned it for like 5 years. I did really well with it, and then I sold it and have since bought into Citibank. But if you could take a shot at explaining price to book, that'd be awesome.
And we talked about it for 2 hours. Does anybody remember that stream? It's pretty. Let me. You
want to share your screen?
Yeah. What happened? Come on. Yeah. Price to book. Okay. Export. Let me just make sure. Yeah, I guess I should share the screen. Present, share screen.
And you are live.
Okay. Yeah, so just price to book. The way I like to think about it, price is stock price, but I like to use market cap over book value. So Citi's 0.8. So what's their market cap, Citi?
1 second.
Like 300 billion, something.
157 billion.
So 157 billion, and we know the price to book is 0.8.
Mm-hmm.
So is the book value higher or lower than 157 billion? What do you guys on the
Higher.
stream think?
No, sorry.
Is the book value higher or lower than 157 billion? Well, it has to be higher, right? Because if it was lower, then the price to book would be above 1.
Correct.
Okay. So price to book is market cap over book value, and if they were exactly equal, if the book value was exactly equal to market cap, then they'd have a price to book of 1, exactly 1. And if it was lower, say it was exactly half, then it would be 2. Then that means Citi is trading at 2 times book value. So book value is 79 billion. 2 times book value is 157 billion. But in this case, we know that it's 0.8. So even without looking at the balance sheet, we know what the book value is. It's just 157 divided by 0.8. It's 196 billion. I'm sure it's not exactly, because it's probably like, I think we looked at it yesterday. I think it's like 205 billion, but I don't know the exact number. I would need the exact number to get the exact book value. It's probably like 0.7732, something like that. But this is close enough. So that's just how you back into it, and it's good to know these things, because if you're looking at the price multiple, and you see, and someone says, their price to book is 0.8, and you know the market cap, you can pretty much estimate real fast the book value and impress people. They go, how'd you know that? Well, it's just algebra. But so we know the market cap is an easy number to understand, because it's just the stock price times the shares outstanding. And that changes all the time. It's constantly changing. So the price to book is constantly changing. If the market cap goes up, like the stock price goes up a lot, will the price to book go up or go down? What do you guys think? So price over book value. So if the market cap goes up, like just say it goes up 10%. Now the price to book goes up. It moves because it's in the top of the equation. And if the price to book goes down, so does the market cap goes down, so does the price to book. They move together. Now the hard part is understanding the book value. That's the really difficult part, because we don't have to do anything to understand the market cap. It's given to us. But the book value, we have to understand what the assets are and the liabilities. Because what is book value? Do you guys know? Like how do you get the book value? It's on the balance sheet. It's that common equation, assets minus liabilities. Because assets minus liabilities equals equity or book value. So it's a value of the company according to the balance sheet. But to go to the next step, to look at the balance sheet, we're gonna probably lose a lot of viewers, because it's gonna be really boring and really hard to kind of like dig into it. We did it for 2 hours yesterday, but like what are some of your suggestions to look at the balance sheet in order to identify whether the book value is inflated or discounted? Like what would you look at on the balance sheet to get a sense?
You gave me one of the answers earlier, which was, you look at their loans and see if the loans are old loans, they're not being paid back, because that could affect the assets, which is a receivable that they expect that isn't going to be paid.
So yeah, by far for a bank, not it wouldn't be for Tesla. They don't provide loans. They take loans. But a bank's business is providing loans. That's their main number one business. They do a lot of things, but the main business is loaning money out. So if you looked at the loans, I can't remember what it was. Well, it was like 600 billion of loans on a I think so. But regardless, you looked at all the loans, and if like 3% were in defaulted already, meaning they're not going to get that money back, that could give you more information to whether you feel the book value makes sense. So what if the default rate of the loans was 7% versus 3%? What do you feel more comfortable in? Like, would you rather invest in Citi if the default rate on its loans was 7% or 3%?
3%.
I guess that's a silly question. It's kind of obvious.
Yeah.
Of course, he'd want a lower default rate. But that's one of the main ways to compare banks. You could look at J.P. Morgan, and I know they have more than 600 billion because they're more than double size. So they probably have like, say, 1.2 trillion of loans. And what if their default rate is 1%, 1/3 of Citi's, then it may justify paying, because they're trading at like 2.5 times book value, right?
Yeah.
The price of the book is like around 2.5. So if you looked at the balance sheet and you realize like J.P. Morgan has a much stronger balance sheet, then even though it's trading at 2.5 times book value, it still may be a better deal than Citi's. Because the reason Citi's trading at below book value is because the balance sheet is weak. But that's kind of like a high level on how to understand it. But I mean, what do you think? You want to embellish on anything, or?
Yeah, I think, as is the case with many of my investments, I'm looking for value, and specific to Citi and JP Morgan, because I actually sold JP Morgan and then I went into Citi. So it's kind of like, and reason for it is, the book value had gotten fairly high. JP Morgan deserves a premium because they've been the best bank for the last 10, 15 years. Yeah. But at a certain point, I'm like, okay, enough with the premium. It's, at some point it's going to matter. Price is going to matter. And I thought there was good value in Citi. And so far, I think it was a good decision on my part because I've already made money on Citi and it still has better fundamentals. So it's like the future looks brighter on the Citi stock because I'm sitting on a stock that has a price to book of 0.8, a PE of 10.6 versus JP Morgan's at 14.08. And JP Morgan's price to book is 2.5. So it's all relative, right? What's cool about doing research on this particular industry is, you can negotiate with yourself. Which one's the best buy? Which one am I going to get best value out of? I think they're all quality banks. I think JP Morgan's the best. But man, I'm paying a big premium for the best. Couldn't I do better with Citi? And so far, I've been doing better with Citi.
Yeah. Yeah, because when you buy anything, including stocks, it's really about the price point. I mean, you're more likely to price a stock than to price a car. Generally you buy a car when you need it. We don't sit there for months and months looking at the car price and waiting for it to go down. But a stock you do. Here's the price to book from this website. MCB. I remember this guy. He was trying to like knock me down, like trying to like say like, oh, I don't know what I'm talking about. So, because I made a video of this company. And the CEO actually commented on his Twitter, saying he put a screenshot of my video and he goes, "This guy's a clown. He doesn't know what he's talking about." And he actually commented on my channel, and he said, I showed this to my legal team."
I remember that. I
can't remember the name of the company. But anyway, so one of his viewers, does anybody know the name? I can't. Why do I?
You should remember that name.
You would think it would be like on the top of my.
Yeah.
It's doing terrible.
Exactly. It would be like a name that I would follow and go, man, maybe I was wrong. But if you're right, you're like, boy, that CEO. Maybe you should pay more attention to running his business than watching my videos.
He's a nutcase. Oh, here it is.
What's his ticker?
Yeah, I want to show you the tweet from the CEO. It's in my phone. His name is Dennis O'Leary. What happened? Dennis O'Leary. It's a catchy name, the name of the company. Let me pull it up. It's so funny that he would on already.
There we go.
Okay. Dennis O'Leary. Oh, it's DPLS. This video has been screen recorded in its entirety and sent to our litigation team due to the grossly inaccurate information. And he never present false and misleading information. And he wrote, "Do not want to promote the guy's YouTube and give him views. He either has no clue or he decided to purposely inflate numbers, which legal will be reviewing."
Is this the company called Dark Pulse?
Yeah, Dark Pulse.
Well, their market
Can you
cap
imagine
is 4 million now.
It's come down a lot. And I don't think my video had anything to do with it.
Wow. Yeah, I remember that. I was like, oh my God, that CEO is so out of his lane. Dude, just focus on running your business. You're always going to have people that, say good things about you and people that criticize you. That's just welcome. It's in your job description. Just go run your business.
Yeah, it's somebody actually commented on one of my subscribers. He said, what you said at 908 hits close to home. He was trying to say positive things to me. He goes, you must filter through a ton of content to create these videos. If you're doing this by yourself, this is a lot of work. Kudos to you. And then the CEO commented, "The information you're referring to is completely false and misleading." Somebody wrote, "If you're the CEO, where did this video mislead?" It was I want to find. I don't mind when people criticize me. I mean, of course, I don't want that to happen. But what eats me up is when they're so ignorant. They don't even know. Like, I'm trying to find. Okay. So this guy, he's like, because I said in a video, they're microscopic, their market cap, meaning they're a really small company. And he responded with, with an MC of close to 500 billion and almost 5 billion shares outstanding with 5 subsidiaries. You don't know the meaning of microscopic. I don't know shares outstanding. I never heard of someone saying, "Oh, we have a lot of shares outstanding, and that means we're doing something really good." I don't know what shares outstanding. That doesn't imply anything. But he's just trying to say something to back up his statement. So, with an MC of close to 500 billion, I don't know the meaning of microscopic. And then I responded and I said, "When did I say microscopic? And who has a market cap of 500 billion? Is MC equal to market cap?" I kind of knew it, but the market cap wasn't 500 billion; it was 500 million. It's a big difference, right? And his response was, "Duh." And I responded with, "Well, you're the one who said they had a 500 billion market cap, which is only 99.9% off." That's the math, 99. And then he goes, "I said close to 500 billion. Relax and be more thorough." Because it was actually 450 million.
Close.
So he thought it was 450 billion.
99% is close.
99.9. Literally, if you did the math, how far away is 500 billion, 500 million? It's 99.9% off, which is kind of far away. And I responded with 500 billion or 400 million. Seems like the same thing, I guess. It's fine. He made a mistake. He thought it was 500 billion. It was really 500 million. I don't care if he makes a mistake, but he doesn't have to try to knock me and even if I did make a mistake, which I didn't, to try to criticize me while he's wrong the whole time. And I'm trying to explain to him that he's wrong, and he keeps saying, justifying his statement. What do you guys think? Isn't that hilarious?
It is hilarious. Nice job, by the way. Good job.
And I think the stock is down quite a bit. When I did the video, it was
it's down to 0.0003.
So when I did the video, it was I didn't even value it. It was 9 cents. And it's not like I even bashed it. I didn't say it was overvalued. All I did was present the numbers.
Mm-hmm.
I wasn't and I even said positive things. I changed the title. Originally, the title, the thumbnail says a hidden gem, because I just want to get clicks. This is a hidden gem. So it wasn't like I was a total bash. I was trying to promote it in a sense, but
yeah.
But it was 9 cents when I did the video, and how much is it now? 0.0002 cents. It's down to 2.7 million, from 500 million to 2.7 million. Quite the company.
Just think, if it can go up to $1, that's it.
Right. Like that guy says, we have what did he say about shares outstanding? We have 5 billion shares outstanding. He's saying this is what does that mean? We have 5 billion shares outstanding. So you're doing great. Whoever has the most shares outstanding is the most successful company.
Nope.
But it's a good story. I like it because the CEO actually commented, even though it was a negative comment. It's kind of cool to have. And all his cronies, a bunch of his cronies started commenting. He reported for manipulation. I am sure someone paying you someone's paying you to bash. I wish someone was paying me. I wrote, can you tell me what I said wrong? And all he said was like, do not provide any information unless you are fully educated. You are not well know about DPLS, and it is hurting our company by you misleading people about us. Please know your mistake and delete the video.
Jeez.
I did remove the video. I do admit there was I did the when I was going through like the 10Q, they had dollars, like the money, it was reported in actual dollars. And then Yahoo Finance, they reported thousands. So I was continuing on from Yahoo Finance. I was saying everything's in thousands, but it was actual.
Mm-hmm.
So I did delete that part. I cut out that part, but that was only part, and it wasn't like, yeah.
So
you guys think it's a good story?
I think it's awesome. Nice job. I think you should feel good about it.
I do.
I do remember when you did that video, and I did watch the video. I thought the CEO was out of his mind.
It's crazy, right? And I did a live stream talking about it.
Yeah, I remember that.
Yeah.
Okay, so to kind of like finish the live stream, we're in no hurry, but let's talk about your best guess. Talk about let's finish book value, and then we'll see if you could kind of just put a stock out there that you think can go 10x in the next 5 to 10 years. But let's finish book value.
Yeah. So Barclays also has 0.8 book value. Well, this website sucks. It didn't list all these companies. We know JP Morgan's like 2.5. So if you're looking for a bank, generally when a bank trades below book value, you'll see the stock rise over time until it hits.
Scott, looks like Scott froze. And
okay, I'm back.
Okay, cool.
Yeah, I don't know when it's going to go up, but it will go up.
I did a search of what is the average book value for large banks, and it said it was 1.28.
Okay.
Yeah.
So that makes sense. So they're trading at the lower end, and most companies revert back to the mean.
Mm-hmm.
Yeah. Is there anything else on
yeah. So let's finish off on best guesses on what is going to be a good stock that can 10x, just to put ideas out there. And it doesn't have to be like a usual suspect like a Tesla, Palantir, Nvidia. And I'll kind of go first and kind of talk about I'm going to talk about a stock that I think can double quickly, and then I'm going to put my best 10xer out there. So first, the one that can go double quickest is going to be AMR, Alpha Metallurgical Resources. Why?
AMR.
It's sold off like crazy. Sold off 74%.
Wow.
This was a $400 stock a year and a half ago. And these guys produce the coal that goes into the steel production, industry. And they have mines in Virginia and West Virginia. And I don't need it to get back to 400 a share. I just needed to get back to 200, and I'm good. I'm out. But this one here has been beat up so bad, and it continues to generate cash flow, continues to make money. If they get any kind of break on commodities, this thing's going to fly up. This is kind of a new investment for me. I got the idea from researching a super investor, and this is going to be my potential double my money the quickest.
It's only 1.4 billion. So this stock could literally 100x, and it's still not going to be in the top 100 companies in the world. You get 100x, and it still will be not a small company, but not that huge. So this is interesting, guys.
And then
Let's just jump into AMR.
Yeah, and the stock that I'm saying is like probably has the best chance to 10x is going to be A-Lab. And that's because this stock is relatively small, 15 billion. It has really gotten the market's attention. It went from September 6th through December 27th, it went up 253%. And then we had the big sell-off in tech, and this one went down 62%. So I started buying here. Why do I think this one can really go high is when you look at their growth, they're growing at 200%. That's exciting. But what's their moat? Got to have a moat, because if you're growing that fast, couldn't NVIDIA just come in and take your market share? Couldn't AMD come in and take your market share? Well, these guys do semiconductors that help. Basically, when you have companies with these massive workloads, you have put a big workload in AWS, and I put one in Azure, and I need them to talk to one another. That's what Astera Labs does. They do the semiconductors that do the best multi-cloud connectivity in the market. And with data centers being built at a really fast rate, they're consuming a lot of Astera Labs. So that, I think this one here is going to be one that I think could be a rocket ship ride.
Yeah, so those are my two. Really interesting. Yeah, those are good ones. So the
which one do you think? You thinking dark pools? That
definitely dark pools. That should that could 10,000x and it's still a microcap company. What was the market cap? Was it 5 million?
4
2 million?
4 million.
4 million. What a shit company. So it is hard to identify 10x because most of the good stocks are already so big they can't really 10x. But I think if I was gonna bank on 2x up to 10x, the two companies that come to mind, United Healthcare, I could see it 2-3xing, but he has kind of a stock that's really been struggling that I used to own, and I kept thinking this is going to blow up. Kraft Heinz.
Kraft Heinz.
They're at 30 billion, and if you look at their history, they were they're trading at $25 a share, $25, and they were just $100, 4 times as big in 2017, and even at $100, even if they get the $100, they're 120 billion market cap, and that's not that big, and they can scale, they can grow, they sell an enormous amount of food, and the one thing that is always going to be demand, no matter what, even if the earth blows up, is food. We have to live. So you don't realize how important food is until you're stuck in somewhere where you don't have access to food. You would literally pay $10,000 for a meal. That's how valuable food is. And I mean, I know they've been kind of struggling, and they're still like people are forgetting about them. But I feel like it's like a company like that, there is that chance for a resurgence. And
Yeah. Yeah, that's this one.
yeah,
It's something to consider. Like, I'm gonna take a look at it.
of
So in
course, I
addition
wouldn't put all my money into it, but
to, so we have some guesses on the chat. So Alarindi Ohay is with, he's going NTLA, and then the other one is CRSP, and then QS. Man, so generous. All the money I'm going to make on these trades. Let me take a look at what I'm buying here. All right,
QS.
so NTLA is Intellia Therapeutics. This is a $990 million market cap company. Whoa, it was $176 a share in 2021. Now it is been discounted by 94%.
Wow.
Beautiful. Talk about a setup. Now, why is this sold off? Is it because they're no revenue and they're not getting to market with their drug? What's the story behind it? Well, let's see if we can do a quick assessment of that.
Yeah, they're definitely losing a lot of money. And revenue is almost nil. It's like 50 million. So it's pretty much non-existent revenue.
They've stayed flat, which isn't good. You got to grow, and they're losing a lot of money.
Even for the small market cap under 1 billion, they're still trading at 12 times revenue, which is a really bad. But it's a therapeutic, in the medical industry, so that means you can have literally no revenue for 15 years, and then you're huge. You just need that drug. And
well, there's a limit to it, right? If you run out of cash, you're done.
Yeah.
Because your employees aren't going to be like, hey, listen, just keep working here. I'm going to write all these IOUs, then you can cash them in someday. They're going to be like, no, I got to feed my kids. I got to pay my mortgage. And your suppliers are not going to be like, oh yeah, I'll send you all that expensive material you need, and you promise to pay me sometime in the future. Yeah, you got it. Nope. Yeah. They get fired for doing that. So they still have cash. They have like, call it 400 million in cash, which gives them about a year of life left. If they can figure it out in a year and stop burning so much cash, maybe they'll make it. So this one here is not up my alley. I don't know enough to know that that's right up your, that's going to work. A-Lab, I do have some knowledge. I work in data center, the industry that knows data centers. I've invested in semiconductor for some time. So I kind of feel comfortable saying, hey, I'm putting capital behind that one. Now let's look at the next idea. And thank you for the idea. I think it's a good one. Thank you. CRSP, CRISPR Therapeutics.
Yeah, I've done a video on them.
CRISPR.
4.4 billion, so it's not that small. I wonder what my valuation
$200. They were $200 a share, so they were what, 5 times bigger at one point. So they were 20 billion at one point, and they're down 76%. And these guys are a Swiss American.
20 billion?
Yeah, back here in 2021.
How much are they now?
4 billion. Keep in mind,
my valuation was 6 billion.
6
in 2021.
Oh, yeah. You were more correct. So one thing that created, or I should say, a big bias that we established in 2021 was in 2020 we had this giant pandemic. Over 1 million people died in the U.S. and I don't know how many millions died globally, but it was just horrible, right? And to the rescue came the biotech industry that came in with these vaccines that ended up, people took the vaccines and then people lived. So it was a huge success. So there was a big bias of, hey, what's going to be the next company that's going to make a gazillion bucks solving a big health issue. Well, we don't have that momentary health issue. We're back to the cancers and the other things that are really hard to solve. So this one here, I think the valuation was probably really high because we were just fresh off of, we were in the COVID era, and they're like, oh yeah, this isn't going to be in high demand because look, we're dealing with this pandemic and it's, you know, kind of bringing the world to its knees. Well, that hasn't, I don't think it's, you know, knock on wood, I don't think we're going to have a pandemic for a while, and we're back to the normal illnesses that the industry is trying to solve now. But that's just an opinion from my part. So this is CRISPR, interesting. And then the last one was QS. QuantumScape. Now we're talking. Is this a quantum stock? No, this is lithium metal batteries. So are these the solid state batteries? Now, if these guys are doing solid state batteries and they figure it out, this could be a 10Xer right here. You know what I'm talking about, Scott?
I did the lithium battery. I did a video in 2021 when the stock was at $24 a share, a 10 billion market cap. What's the market cap today?
3.7.
Okay, so I didn't have them. I did say they were overvalued, but not that much, just a little bit. And yeah, it's 3.7 billion. But this is a industry that's going to be really a lot of demand because as we got the robotaxi, and then so the more of those types of cars.
Yeah, solid state.
Definitely.
So the difference.
Yeah.
Sorry to interrupt.
No, it's good.
This is a big, like, so if you get to a solid state lithium battery, the efficiency of the battery and its range just go through the roof. Just a big innovation, but they can't get it right. Right now, they can't make the technology be stable, and their defect rate is so high you can't use it because you don't want to deliver a car and 6 out of 10 cars or get recalled. Oh, sorry, your batteries are bad and it stranded you like on the way to work. So they have to get the quality down or quality improved. They have to get the reject rate down, and they haven't been able to. But if this company is able to do that, this is going to be a 10Xer.
Definitely. I may do it if I stream later. I may talk about this company because this seems really interesting and appealing to me, because there's going to be a ton of demand for not just with Tesla and Google, but there's a lot of Chinese companies that have robotaxis, and there's going to be so many more robotaxis because now that it's finally getting accepted into the market, these companies need to start scaling in order to meet the demands. But yeah, this is a good one.
Yeah. Way to put some brainstorming out there. And FYI, A-Lab came out of live stream. Oscar was a combination of super investor live stream because Michael Burry bought into Oscar Health. It caught my attention there. Then it came up on live streams and people brought him up. So I'm making money from stocks that people bring up on the live streams. We look at it, the fundamentals look right, the story looks right, and Shazam! It's a good idea generator for me. So keep the ideas coming, everybody.
Yeah, QuantumScape.
All right.
Does anybody know? Oh, sorry.
Go ahead. Finish your thought.
Is that Olarinde? Are you the one who follows QuantumScape? Do you know when they're gonna get revenue? Is there like because they're pre-revenue? Is there did they mention like in 2026, 2027? Because that's important to get revenue. But yeah, that was my only question.
And I'm gonna answer a question that came up on ADMA. And healthcare stocks are kind of and cool. Thanks, Jack. I appreciate the super chat. That's awesome. Thank you so much.
Yeah, thanks.
And, so ADMA, let's kind of go through it. And I'll say that this one has been a big success because you see the stock go just real nice gain, 400% from mid 2023 up to now. But it's kind of hit a plateau. If you look at from August 2024 to this point, so about 10 months. Yeah, about 10 months. And the stock still shows that it's discounted. When I look at the stock and value it, this stock is discounted by 29%. I base it on, let me get a different view here. Perfect. So the cash flows look good. These are my estimates, but it's already producing cash. It's a young company. That's why I'm using a higher discount rate. And the cash flows look good. They're going to grow quickly because it's a high growth company. I'll look at the growth rate in a little bit. And so I think cash flows look good and earnings per share look good. So both give me a discount on the stock. I have recently sold ADMA because I'm trying to create cash. That was the reason for it. It wasn't because I didn't like the stock. It's not because I didn't like the company. It's just,
wow.
I sell a stock from time to time, and it has to be sacrificed. I want to create more cash because I feel like the market's expensive, and I want more cash so that if it does have a correction, I have capital to buy stocks at a discount. So this one here was one that I sold. I didn't have a whole lot, and their growth rate is really good, 62%.
Yeah, they
quarterly 40%.
Stock is 10x in 4 years, so I mean it's crushing it.
Yeah, and it keeps growing, which is phenomenal. But it's kind of hit a plateau for the last 10, 11 months. So that caught my attention that, hey, it plateaued. What's going on? Free cash flow's there. It's not really consistent because they're young and they just started making cash flow. Gross margins are okay. It's not like an 80% gross margin that maybe a pure play pharmaceutical company would have. So this one here is, I can understand somebody holding the stock. I can understand somebody buying the stock, but I hope you guys understand why I sold it. Is I have a lot of good stocks, and this one was the one that had the most question marks. The question marks being is, why did it stop working for 11 months? And second, it's just a young company. It's going to be less predictable. So I just took this one off the board. I'd be happy to buy it again, but hopefully I'm not buying it at a higher price someday.
You get better buy soon because it's going to 10x again. Jack Logo. This is I mean, they are pretty flat. The past year, their revenue is flat, but they've grown revenue a ton since 2021. So it looks like they have the ability to do it. Can they do it again? Yeah, I like it. Plasma.
Yeah, this is, I mean, I have like 10 stocks that I could show you that are growing well in healthcare. And for some reason, they kind of hit a plateau and they stop working. Here's ADMA. The another one is United Therapeutics. This one here is a high growth stock, and it's down 11%, but it's been a good stock. Not as good as ADMA, but it's been a good stock, and it's just had a pullback. So this one here, when you look at their growth rates and so forth, I mean, it's a good looking company. You got good growth. It's a big company now, $3 billion. They produce cash flow. Free cash flow is above $1 billion now. They have Gross margins of 89%. I mean, there's a lot to like here, and you're like, why is this stock?
Wow, yeah.
Why is this stock not rising? What's going on, stock market? It's because all the money's going to AI.
And it did 10x the past 3 years, but you mean in the past year?
This one here?
Are we talking to ADMA still, or?
No. I'm talking about
Oh,
United Therapeutics.
okay.
United Therapeutics, it went
Still on
from
United Therapeutics.
it went up
Okay.
3x over the last
Yeah.
4.5 years or so.
Well, 284. That's a big stock price.
So we'll see where ADMA goes. It had a phenomenal rise from late 2023 into late 2024. Man, 500% 1 year.
That's
Incredible.
crazy. It's like
I think
when
that
you
was the move.
in 2003.
Yeah, that was, I mean, this is where the money was made, was when you went from here to here and you made 583%, right? Since then, the stock hasn't gone up. Actually went down 20%. So you had to pick, lows, like it pulled back, you can buy it here, but it hasn't done much in the past year.
Yeah. It's not moving much. But the market is fickle. You can always make money, whether it's a bull or bear market. You just got to know where to put it. I'm still trying to figure that out myself, but maybe I'll make some moves, sell off some of my. It's so hard to sell off Meta, and I don't want to have to pay all the taxes.
No, don't sell Meta. I'm not selling any of my Meta. It's the biggest stock in my portfolio. I'm actually buying Meta.
I can't believe it's broke through 700, and it's just.
Who said, did you say it was going to go to 1,000, or somebody told me that?
I mean, definitely in the 1,000. If not, either by the end of the year or early next year. I know, because I have so much of it. I know what you're saying, but like the market is not. There's no pullback in terms of AI. It's just plowing into it, and I think this company, along with a handful of others, but is going to be the recipient of.
I agree.
That's why Nvidia keeps going up.
Yeah, I think Meta has a total shot at the AI business, because they have 4 billion monthly active users. 4 billion people on Earth log into a Meta app, and they're presenting all those users with the opportunity to use Meta AI. Well, if they get like 1 billion users of their AI app, that's pretty dominant. And I think that's going to be worth a lot. And I don't feel like, maybe it is priced into the stock now that the market realizes it. But their legacy businesses, Facebook, Instagram, they're just cranking out money, and they just started to monetize WhatsApp. They just started to advertise on it.
Yeah,
and
I don't think it's overvalued at all. Yeah.
Yeah, I think it's still discounted by a little bit. Let me show you what I've got.
I do. Maybe I should do a video. I'm having problems with Camtasia. I can't. That's why I keep doing live streams, because I can't create videos anymore. It's not working. But actually, live streams are better because I don't have to edit.
I have Meta discounted at 18%. Even after a nice rise in 2025, it's up like 25% or so, 27%. And it just,
yeah.
Go ahead.
No, it's just, I mean, we all know AI is big, but they've been doing it longer than almost anyone. They were doing it before people realized what it was. So, and because they changed the name of the company from Facebook to Meta, so they already started rebranding. I mean, and people like thinking, Zuckerberg, what's he doing? Is he crazy? You have this great company, Facebook, and now you're kind of changing things up. And the stock did go down a lot because of that, but he's proven it to be successful. So 10 trillion market cap, they'll be the first. I hope I'm
Awesome.
right.
Awesome.
Yeah.
Well, I'll be very happy. It's 12% of my portfolio, and
Yeah.
I'm not going to sell one share. If they were to like to start doing something crazy again, like the metaverse, maybe I would sell some shares. But at this point, it's like, no, I'm leaning into this one.
It's working.
All right.
It's been working. Okay.
Well, thanks,
Sounds
Scott.
good.
Appreciate you streaming with me, everybody. Thanks so much for tuning in. Thanks again, Jack, for the super chat. Thanks everybody for tuning in, especially subscribers and members of the channel that I've got. Really appreciate it. Thank you, Scott. Really appreciate it. And I look forward to streaming again with you soon.
Absolutely. Okay.
We'll
Talk
see you
to you
guys
later. Okay.